This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2017. They're one of my go-to exchanges. You can buy, sell, and trade cryptocurrencies on Uphold. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is James Wallis, who's the Vice President of Central Bank Engagements at Ripple. James, it's great to have you back on the show.
Tony, great to be back. Looking forward to the conversation.
Yeah, boy, I think it was last year that we spoke, and of course, a lot has changed since then. Ripple certainly has formed some new partnerships. There's been a lot of announcements. And I would love to start off with Ripple's CBDC platform because there's been, it seems, an official branding for the service, if I'm not mistaken. Tell us about that and how it all works.
Yeah, great. Well, thank you. It's a subject near and dear to my heart, obviously. We've been working with central banks as a company for many years. And then, a couple of years ago, we started our journey along the CBDC route. It was clearly a good fit for us because we have technology that's very relevant to currencies and relationships with central banks through our work we do with RippleNet. So specifically, we've built this platform. So we're calling it, the official name is the Ripple CBDC platform. And the reason it's a platform is it's really designed to be the sort of core infrastructure that a central bank or a commercial bank can use for issuing their digital currencies. So the basic concept is a full life cycle. So if you think about a central bank, they want to create a CBDC, they want to be able to distribute it, they want people to be able to use it for payments. So it covers that whole range. So the process of actually creating and minting the currency on the ledger, distributing that to either directly to individuals, or most likely it's going to be through commercial banks. That's the most likely model that we think is going to happen. And then onto individual users, and then a whole series of different use cases, which we can sort of talk about in a minute. The basic underlying technology is based on the XRP ledger. So as I'm sure you know, Tony, the ledger is it's been around for over 10 years, been very, very robust. Billions of dollars of transactions flowed across it. Designed from the ground up to issue currencies. XRP obviously being the primary native currency on the ledger, but there are other currencies. And also very sort of environmentally friendly, right? So there's, the consensus mechanism is a very low lift in terms of energy consumption. So we sort of started there and said, okay, well, this platform, this ledger is a great sort of starting point. It's designed for doing things like CBDCs. But then we realized, obviously, crypto is not that easy for people necessarily to use, right? It's one of the things the industry is working on is a bit more friendly user interfaces and so forth. So we built these other components on top. So this is where the platform piece comes in. So the primary piece is what we call the issuer. So this is a software layer that sits on top of the ledger that basically walks the central bank through all those steps, like the creation of minting, the sign-off, approval from the chief cashier to create and so forth. So that's the issuer piece, and then that allows then the distribution I mentioned and the transactions. We then have a sort of different component, which is we call it operator, which is not for the people creating currency, but for the people that are using it, like commercial banks. And then the fourth piece of the puzzle is wallets. There are choices there. There are different types of wallets, wallets for the banks, wallets for consumers, wallets that can deal with offline transactions when there's no internet. So those essentially are the sort of four building blocks of the platform.
And for the wallets aspect, are you providing a wallet service, or are you helping them to integrate the XRP ledger into their own proprietary wallet?
Great question. At the moment, it's all of the above. I mean, we do have a couple of wallets that we're working with that at various stages of development that we're using on some of our projects with central banks that we've announced. But there's also, an SDK that will allow banks to integrate into their own wallet. So we recognize that there's definitely not going to be one size fits all. If you're a bank and you have a super app, or you have your own wallet, you want to add this functionality into your wallet. Other people might want to have a separate wallet. So we're going to let the market really dictate ultimately where that goes. So we're trying to offer some choices in that space.
Yeah, that definitely makes sense. Now, there was news around the country of Colombia working with Ripple to build a CBDC. Tell us about that partnership, maybe how it came about and how things are going there.
Yeah, thanks. So, we've announced 5 different countries so far that we're working with. Colombia is one of the more recent ones, and they're all at different stages. I mean, you're probably aware, through various research that somewhere in the sort of 80 to 90% of central banks are doing different things with CBDCs. In Colombia, they have a very sort of thoughtful program. They have a Ministry of Technology called Mintech that really are running a lot of the technical evaluations on behalf of the government and the central bank. So we're working along with one of our other partners with that organization. Their focus specifically is they want to look at improvements in high value payments. So not sort of consumer payments, but more B2B type payments. So that's good because that's one of the sort of core use cases around a CBDC. We're using our platform. So the platform we just talked to you about, we're using that as part of the project. And we just kicked off the work a few months ago, and that'll run through this year. So that's very exciting. Other ones are very different use cases. So maybe if I don't mind, Tony, I'll just maybe highlight the update on Palau. Right, so Palau is one I think maybe we talked about last time. Just to remind your listeners, Palau is a small country in the Pacific. They're a US dollar country, but they don't have a central bank. And they wanted, the president and the Ministry of Finance wanted to have sort of a national identity sort of currency and something that could be used initially as an alternative to cash. Cash is a big thing in Palau, and people line up and get money out on payday, and then they use cash, and even sending it from one island to another, it's not super efficient. So the goal here was to issue a national currency. The end product is a government issued USD denominated stablecoin running on the public XRP ledger. So it's kind of an interesting one. So you've got a government, you've got the public ledger, you've got a stablecoin, you've got the US dollar all in there. And that's up and live running now with some government employees, and that will be expanded out in due course. And just one point to make on that, again, since we're talking about the platform, at least for now, the platform has been designed originally sort of CBDCs and on a private ledger because central banks, are not yet comfortable with, issuing on the public ledger. Right. But the way we designed it is sort of an either or. So you can issue, central banks can use it for issuing CBDC, and commercial banks can use it for issuing, say, their own stablecoins. And you can issue on the private ledger as designed, but you can also issue on the public XRP ledger. So the same software, the same platform is being used in Palau as it is being used in these other countries I mentioned.
So do you foresee a scenario where a central bank could have both their CBDC on the private ledger, but maybe a stable coin that's for retail that they put on the public, or is that too much? They may just go with one scenario?
I don't know. It's a great question. I think there's technically nothing stopping that from happening. I mean, it might make the regulatory environment a little bit more complex. I think my guess is we're more likely to see the private sector doing stable coins with different sort of use cases, and the central bank sticking primarily to central bank issued money. But they're going to have to coexist, right? I mean, this is one of the things I talk about a lot. If you roll the clock forward, there's no doubt we're going to have CBDCs in many countries, if not most. There's no doubt that stablecoins, I think, are on the increase. Stablecoins have different flavors. It could be a bank-issued stablecoin for a private use case, could be a public-issued stablecoin. And then you've got native cryptos, right? So they all need to coexist, right? And I think, we want to try and see an environment where, people will use whichever is the one that's best for that particular use case that they have in mind. People aren't going to be forced to use CBDC. They'll use it if they think it's a value, right? And if they don't think it's a value, they'll use something else. And the same goes for stable coins and native crypto.
Yeah, that absolutely makes sense. There were some questions that came from the community about programmable CBDCs. Look, I think we both know there's certain narratives out there, right? Certain politicians and different people say different things, but generally it's the middle of the road, the balance approach of here's this technology, here's all the benefits, there's pros and cons to everything, and people are a bit concerned about the programmability. So I don't know how much Ripple and you and your team are involved in having the conversations of how will these CBDCs function, what type of programmability is going to be involved, and how does that align to the native country's constitution, if you want to call it that, or rights.
Yeah.
Here in the United States, the U.S. Constitution, right to privacy and things like that.
Yeah, big topic, Tony. So, I think firstly, there's a slight difference. There's people talk about programmable payments, and people also talk about programmable money. It's a slight difference. So, programmable money, could be money, for example, issued by a central bank or a government for relief purposes, but it can only be used for certain uses, or maybe even expires at a certain date in time, right? So there are definitely things you can do to sort of put sort of conditions around both money and payments as to what you can and can't do. I think the privacy issue is sort of the bigger one. People are concerned about potentially governments seeing what they're spending their money on. This is a big issue in the US. It's a big issue in Europe with GDPR. In many other markets. And I don't know exactly where it's going to end up. I think the policymakers will kind of set the rules. I think there's going to be most likely, for example, in Europe, the ECB, they're talking about, and also the Bank of England, you can do transactions up to a certain amount that are anonymous, and anything above that, it needs to be known. So it's the same as in the US, right? You can't bring more than $10,000 into the country without declaring it. So yeah. I think some form of the same rules will exist. At the end of the day, though, the governments and the central banks are going to have to demonstrate trust, right? Because the technology obviously captures lots of information. It's like, but you're not going to use it. So, we need to make sure that the private sector and citizens are involved in some of these design choices, right? Because again, as I've said all the time, if these things are not seen as value and people don't trust them, they won't use them, right? And then everyone's wasting their time.
Yeah, well put. That it's on the government. The onus is on the government to communicate this well to the people and provide as much transparency and details. And to your point, to build a trust, like we're putting such and such guardrails in place. There's going to be certain laws where this data cannot leave here or whatever it may be, right? And the onus is on the government for sure.
Yeah, and also don't forget, Tony, people are quite happy with their banks knowing about that. You have a credit card. Credit card has some visibility to your transactions. Your bank has some visibility. So I think it's right to be a topic of discussion, but I think there are ways to mitigate any of the concerns.
For sure. Now, there were some other partnerships that were announced. I think Montenegro. There was also Hong Kong, the tokenization of real estate on the XRP ledger. Can you talk a bit about those?
Yeah, again, good selection of projects there. The Hong Kong one is very interesting. So the HKMA, the Hong Kong Monetary Authority, are looking at the possibility of an eHKD. So they have a number of different projects running. We're in a consortium with a number of partners, including Fubon Bank, which is a locally based bank. And the idea here is, whilst there is a CBDC element, it's more what is the broader use case. So the example here is people own property and they want to release capital from their property, and to do that today with the existing sort of legal structure and the existing financial structure is quite a lengthy process, and it sort of takes time, and it's lots of paperwork and it's expensive. So the idea here is to sort of test out some of the things like a digital currency, a DeFi protocol. So the idea is you essentially your property is tokenized. The deeds to the property are tokenized, and you can work with the bank to through a DeFi lending protocol to release capital. Now, there's a lot more detail behind that, but essentially the idea is to showcase that you can, if you have real world assets tokenized, and you have a currency that's tokenized, a digital currency like a CBDC, and you have things like a DeFi lending protocol, when you put those things all together, that's when you get the ultimate efficiency, right? If you just tokenize one thing, but you're still using the old payment mechanism, you don't get all the benefit. So it's really a showcase project that will be, I think the goal there is to showcase that at the Hong Kong FinTech Week later in the year. Montenegro, again, a super interesting one, very different. That Montenegro is, they use the euro, but they're not part of the Eurozone. They're in the process of that discussion. So they're keen to get a number of sort of digital initiatives up and running in the country, and the currency is one of them. So that one is, I think, super interesting because we're working through, well, would it be a CBDC? Would it be a stablecoin given the legal situation with Europe? And then we have the European Commission who will sort of be overseeing the project to make sure that anything that's done there is compatible with what may happen in Europe down the road. So that's, as a percentage of the project, the technology is probably a little bit less in that one. There's a lot of other factors, which makes it super interesting.
Yeah. Real quick, going back to that Hong Kong real estate and tokenizing your property. I mean, that would be incredible. And a whole other secondary market, and not to mention real estate, but other things like artwork and collectibles, and with the tokenization. So, and correct me if I'm wrong here. So let's say I'm in Hong Kong. I have a apartment, a condo. I tokenize the value of that condo, let's say on the XRP ledger, and I can lend that out and earn on that in a way. Is that kind of how it would work?
There's a few different scenarios being looked at, Tony. This particular one is essentially to get a loan from the bank. So you're sort of giving up 10% of the value of your property. So you're sort of liquidating, if you like, to some extent. All the sort of what happens next pieces are all still being sort of thought through. So we've got a very creative team there working in a consortium on all these different scenarios. What happens here? What happens there? What happens there? So, but yeah, that's the basic principle, is to enable people to free up capital from their assets.
Yeah, I'm super excited by that topic. I'm fascinated by it because I feel like in addition to real estate and other things, there's just going to be this secondary market where people can monetize a lot of the things they have, maybe earn income from that. So all of those things fascinate me, and even their data, tokenizing your data on the blockchain. So it's a brave new world.
No, exactly. And I think that's one of the visions that a lot of us in the industry have had, right? Is this whole area around secondary markets and just getting more buyers and sellers together, right? So you can do things more efficiently, and everyone, hopefully everyone's a winner in there somehow.
For sure. Now, there was news of Ripple having or hosting a CBDC Innovate hackathon. Can you tell us about that?
Yeah, we did one last year, which was successful. This year we're sort of amping it up a little bit. So what we're trying, the goal here really, Tony, is to say, look, you've got the basics of a CBC infrastructure, and that's really what we're working on, this platform, right, to enable you to do those basic things I mentioned. But where the rubber hits the road is the use cases. So what is a lot of people talk about financial inclusion use cases, although they talk about lending protocols and all sorts of things like we just mentioned. So the idea here is to open up to the whole developer community. Bring your ideas forward, bring your CBDC ideas forward. It doesn't matter whether you're like an individual developer developing on a ledger, or you're an enterprise ledger working for a Fortune 500 country, right? We really want to see ideas from everywhere. So we've got this hackathon. The first phase, the deadline for submission is on the 18th of August, so coming up. Amazingly, though, we've already had over 1,000 people sign up. So which is pretty impressive. Now that we have then a sort of judging process that goes on through the summer and the fall, and ultimately there'll be a handful of winners that will be sort of highlighted and showcased at our Swell event later in the year. So very exciting. But the idea is that these use cases turn into something, right? It's not just let's just draw something on a PowerPoint, right? The idea is actually do some building, right, and actually come up with something that could be deployed across different sort of CBC projects.
Oh, for sure. Now tell us about, the relationships and conversations happening with central banks as much as you can. Given how we've seen crypto adoption grow, you have the likes of BlackRock entering the market. Just this past Monday, PayPal announced they launched a stablecoin in the Ethereum blockchain. Have the central banks been more open to doing a stablecoin or CBDCs? Given that time has passed, there's once again more awareness, more adoption. How have those conversations developed and matured?
Yeah, I think I think the trend is very positive. I mean, there's pluses and minuses. Different countries have different things going on, distractions at different times.
Sure.
But generally, I think the trend is forward. I think the biggest trend that I've seen is from the what you might call the sort of TradFi, traditional finance world. So not only giants like BlackRock getting involved, but also commercial banks. There seems to be a definite more interest in stable coins and tokenized deposits and different tokenizing other sorts of real world assets like bonds and securities. So to me, that's a huge validation in terms of the market maturing. You go back 5 years and the forward-looking banks were sort of like touching it, but not really. They were like at arm's length. And then now I think I wouldn't say everyone's fully embraced it yet. I don't think we're quite at that stage, but I think we're definitely trending in that direction. And I think that's good, right? I think people realize there's value in the capabilities of these types of assets. And, at the end of the day, the financial world, they like to make money, right? So, they wouldn't be investing time if they didn't think they could make a return on it.
Yeah. And then, I mean, just the mere benefits as well, because like PayPal launching a stable coin, they're already a payments giant. One would say, well, why do you need a stable coin? But there's a ton of benefits in improving payments time and settlement and all that. Any thoughts on the PayPal stable coin?
I think it's a very interesting announcement. There's different, as we've mentioned earlier, there's different flavors of stable coins. I'm not on the inside track on PayPal, but they are a big payments company. They have a lot of funding. They have obviously a lot of deposits. So I think this is probably a sort of an efficiency play for them. Like they can offer better service and offer and make more margin through deployment of a stablecoin. It'll be interesting to see how it plays out, but. Stablecoin is part of that sort of trifecta of digital assets I mentioned: CBDC, stablecoins, and native crypto. So the more initiatives I think across those three is better for the market overall. So I think it's it's a very interesting initiative, and going to watch that one closely.
So, hard question for you. You're going to have central banks, creating their CBDCs. Some countries, like for example, Palau, doing a national stable coin or digital currency.
Yeah.
And then you have the private sector like PayPal and Circle and so forth doing their stable coins. You're going to have a lot of stable coins and a lot of CBDCs. How do you think, there's policing of this? And when I say that, I mean, like, look, in every industry, there's bad actors, right? There's many good actors, but there's always somebody trying to do something bad or whatever it is.
Yeah.
How do you think the world governments police this so that we don't have situations like Terra Luna or FTX? And it doesn't have to be a crypto company; it could be a TradFi company that existed before, but just is doing things wrong.
Yeah, no. Look, it's inevitable. The standards and regulations are coming thick and fast, right? I mean, even before crypto, regulations. As soon as something bad happened, there was a new regulation, right, designed to. And we at Ripple have always tried to encourage regulators to be more on the front foot and be proactive, right? Try and help set the stage for the market rather than react to things that happen in the market, right? And so I think when we see things like the MICA initiative in Europe around setting out a framework for digital assets, I think that's a big plus. I think we'll see more standards coming out. I think industry eventually around things like interoperability between different protocols. Eventually that will happen. I think the hardest bit though is just trying to synchronize it all, right? I mean, it's you can't wait for the regulations to be in place, otherwise nothing would ever happen, right? You can't wait for the perfect rule book. You have to kind of set the rule book out with the guidelines and then modify the rule book over time.
Right.
But we've consistently said that regulatory clarity is needed. And that way you could plan your business, right? I mean, who would plan a business model going into a black hole, not knowing what's the other side of the black hole, right? You need to have some kind of like rules of the road, otherwise you can't really set up a business. And I think this is something we, particularly in the US, we're trying to encourage wherever we can. A bit more openness towards thoughtful regulation that encourages growth in industry, globally and also in the US, right? And I think that's remains a goal of ours and something we work on every day.
For sure. And you mentioned MICA, the EU passing regulations, the UK also passing regulations. They certainly seem to be moving faster than the United States right now. Has those regulations that have been passed in the EU and the UK helped to facilitate more business for Ripple and open, more opportunities in that region at least?
I think the answer is that will be the case. I mean, they're all still quite new, right? I mean, they're not really fully rolled out yet. So, but anything that helps with clarity is a plus, right? So we certainly, have seen more clarity from the regulators around our business in the UK and Japan and the Middle East than the US, right? I mean, that's a well-documented conversation, right? So I don't need to go over that ground again, but I think other parts of the world are definitely leading.
Any thoughts on the preliminary bills that we have here in the United States? We've made some progress, I think, over the past month. Patrick McHenry and Glenn Thompson's bill. Then you have the Lummis Gillibrand bill. We know the McHenry bill got marked up in the House. Still has to be voted on in the House, but I'm feeling a bit more optimistic. There's some level of progress. Any thoughts on those bills and what's happening?
We have a very smart team of regulatory policy experts in Ripple. So, I'm sort of trusting them to be interpreting that. But sure. I think activity is good, right? I mean, I think the ultimately these things are going to have to get resolved, right? I mean, the US can't afford to be in a whole different sort of league with other parts of the world, right? So it's going to have to get resolved. I think it's a complicated environment here, right? You have a lot of different people that have a say in making decisions and policies. So I personally try and not spend too much time on that and focus on the clients.
Yeah, for sure. I mean, you're more on the building side, and well, at least in parallel, some of the regulations are getting pushed through. So
yeah,
it totally makes sense. Final question here for you. What's on the remainder of 2023's roadmap for you guys? Anything you can highlight?
Yeah, I think we're on a bit of a roll with the number of projects that we've announced. As I mentioned, we've got 5 that we've externally announced. We have some other ones we're working on. We have product roadmap. We have lots of different. I mean, it's really rolling our sleeves up and continuing the journey here, right? I mean, I think what people sometimes forget is you have all the exciting news, and then the difference between a topic being a hot topic and then it becoming a reality is a lot of hard work.
Yeah.
So we're in the lot of hard work stage now, right? And that includes like more partners. We're still a relatively small company, so we look to partners to help us on some of these projects. So just basically a lot of hard work is the short answer.
Yeah, I to your point. Yeah, announcements, but then you got to actually get these central banks up and running, get the wallet and everything going, right?
Yeah, exactly. It's not easy, right? But that's good. It's personally, that's what I like, is like seeing things through to the end, right? It's just make these things a reality. That's I think what we're all about here. We're builders at Ripple, and that's what we want to do.
For sure. James, always a pleasure chatting with you. I love having you on because you get a lot of insight into the building that's happening. So appreciate you. Thank you so much for joining.
Tony, it's a pleasure as always. Thanks so much.